We're going to get to the best guests of 2025 that we've had on the show. And I'm going to bring in my partner in crime to help me throughout the rest of the show, because he started off as an intern at the beginning of this year, and we've promoted him all the way up to a regular contributor for not just one block, but now 3 blocks of the Big Skinny. Welcome in the Dodd Man. How you doing, buddy?
Dude, I'm doing great. This is the B block. I'm moving up in the world, Lou. This
D to
wonderful.
B, man.
You know,
It's
I
like,
remember those days of, just in the copy room, just checking mail, doing that type stuff. It's come a long way. And since how many months now? Just a few short months.
Yeah, man. I'm proud of you. 9 months in, and now you're getting promoted, but you're never getting to the A block, man. Unless you want to fill in for me one week, then have at it.
No, that's all right, man. You got that.
So listen, man, the whole thing, we started this on a whim, right? And some confidence that we could do something that was interesting. And that was also predicated on the fact that we know we don't know everything. We got to bring in some really smart guests, and we've had them in, by the boatloads here. So let's go through some of the best guests. And this is not just me picking, this is you as well, because you're an investor. You hear and listen to a lot of other people drone on about the market, some boring, some captivating. We're going to go through some of these guests that really delivered the information, the insights, and the investment returns for the large part.
Let's do it.
Yeah. Unlike my birthday, you didn't prepare any special envelopes, though. That's good. We don't have props this time.
Well, we'll see. We'll see how the rest of the episode goes.
All right. Kicking it off, episode 18, Chris Camillo, who of Dumb Money TV, right, who basically uses social arbitrage, using social media to find new investments. Huge humanoid robot guy. I wanted him to convince me that I was wrong. I don't know that he did it, because my big thesis with humanoid robots is we're going to have to wait a long time, and the wait's going to suck for these humanoid robots to be deployed. But what were your thoughts after listening to him make his case for why now is the time for humanoid robots?
Well, first things first, you made mention of it. The thing that stood out, right off the bat with Chris was how he said that he listens to almost zero financial media, and he really does it all, as he called it, the financial arbitrage, in TikTok, because he spends about 4 hours a day just, looking at, data and collecting data that way, which just shows sign of the times, for retail investors and whatnot. But as far as, the robots go, he definitely, I think he thinks it's a shorter runway than you were thinking. But, I definitely, I don't think we talked about with Chris about the whole leasing option. That's one thing that, when we talk about, getting into the particulars of the robots, if you could
how
lease
much
that
they
out,
cost.
so that growing. Yeah.
Yeah. No, and I think you're right. And one of the insights I gleaned from it here, we're showing this research from Pat Invest, that the stack of technology that has to go in for humanoid robots is expansive. I think there's opportunities throughout this stack. I just think, the AI and the reasoning bit, the different chips and the actuators and different sensors and things like that. I think there's pockets of opportunity that you can make a ton of money beforehand, but I don't think we're anywhere close to Optimus robots taking over the world. But nevertheless, because we do believe in having both sides of the argument here, I think people should check it out. It was a great interview, very insightful. Chris spends tons of time, deep dive, talking with private companies, the CEOs that are involved in that. So again, very well worth a re-listen if you haven't listened to it the first time. But even if you go back, it's worth it. Next up was none other than the guys that kicked off our focus on the AI energy trend, right? Mike Alfred of Alpine Fox, probably one of, the most engaging guys that's on X right now. Maybe he makes some things up. He's a little sarcastic. If you follow his tweets. I was going to say, he's
kind of almost become a internet personality just through X. I believe he posts, every, I don't want to say 20 minutes or so, when he's maybe not traveling or whatnot, but he's posting a lot of, great insight, but as well as, personal stuff.
Yeah, look, I love too. You and I, he does these spaces all the time as well. So people, you should check it out. This is the interesting thing. He's actually, some people give him grief that he's promoting some of the stocks, but he's an investor first, and he's made meaningful, 6-7 figure investments in a lot of these companies that he's talking about, and then he's sharing his diligence, so I can't fault him for it. But he got us into IREN. He's on the board there. Eric Jackson had also mentioned that, but that whole space between Terawulf, IREN, Cipher Mining, Clean Spark, this is I said it in an interview that we did for The Upside, that In the early days, I thought the bottleneck for AI was going to be chip supplies, but it's actually power. And Mike Alfred really drives that point home on why he thinks IREN's the best position, but why that whole space is critical for AI to really take off and realize its full potential.
Yeah, and Alfred has a little competition going, I think, there with Jim Chanos, doesn't he?
Yeah, man. Jim Chanos, a famous short seller who retired to just be, spew hate on X at people, just be bearish. But, they were doing it off. I think right now we're into round 3 or 4. I think Chanos might have won it recently, a round or 2 here just because of the recent pullback in IREN. But ultimately, I think it's going to be a KO for Alfred when IREN gets to realize the full potential of their business model.
Yeah. All right.
Speaking of this business model, right? Another great guest with Terawulf CFO, Patrick Fleury, who I'm actually going to get a chance to meet in person tomorrow. He's in town. But interesting enough, I loved his just very straight up approach to explaining exactly what Terawulf's doing in relation to IREN and the rest of the market. And he was just a humble, down-to-earth guy that's been there, done that before, and just gave some really good insights on that same space.
Yeah, and one thing I also noticed listening to his interview, and then as well as Paul Prager interview that we did with the Upside, they, I don't want to say the same things, but they're very convicted, and they're very, they sound very knowledgeable in what they're doing, and it seems evident. So.
Yeah, so here's the thing for people listening, right? If you looked at IREN versus Terawulf, this is the trend that they're both playing to, that there's a mega power need and there's a huge payoff here. But these companies are going about it differently. Terawulf's team, Paul Prager and Patrick Fleury, come out of operating and building power plants. That's their business. It's power, constructing steel and concrete. They don't get into the chips, whereas IREN is building the data centers and putting the chips in there as well. So there's a bifurcation there. There's the guys that are just saying, let us build the shell, the raw metal where you're going to house these data centers, and there's other guys saying, let's do that and everything else that goes in it. And there's more margin on the one on the right, but there's more technology risk on the latter as well. So important distinctions if you're a shareholder. I'm happy to be a shareholder of both for different reasons, but as you're doing your diligence in that space, you got to know who you own, why you own it, and what's their track record.
All right. Next up was Eric Jackson.
This was your favorite guest. No. Is it Eric Jackson or Jonathan? No, dude.
Oh, Jonathan Faison. Yeah. Sorry. Jumping ahead.
I know. Seriously. Your favorite guest.
I love Jonathan coming on the show because he just brought so much and, all about the biotech space. But he just had he gave so much to, our viewers with his knowledge, his, different, stock picks, and I thought he was just a great overall guest.
Yeah, I agreed. I love he's the everyday man's, biotech is one of the hardest sectors to learn to be an investor, right? To be successful. He's self-taught. He didn't go to medical school. He's figured it out. He shares very candidly his wins, his losses, his victories and defeats, and he's been at it now for over a decade, has a community of just very well-informed investors that help him diligence opportunities. I just loved his humility and the fact that he was just real, right? It's an encouragement. If anyone here has been, we made a bold call that biotech was going to rebound this year, and we'll talk about that later. It was overdue for a payday if you just looked at the patent filings. But it's such an intimidating sector for most investors. But Jonathan is worth a follow because he'll give you all the confidence and encouragement you need that you can do it too, even if you have no background whatsoever in biotech. I think that was one of the best takeaways from his interviews. In addition to some of the stock picks he provided are doing really well, which is why we're going to have him on an upcoming episode again to talk about some of those winners that have more upside to them.
Yeah, definitely hopefully having him back.
Yeah, so are you jumping the gun?
I don't want to call the next person because I got it wrong the last time.
So. No, you got it right, dude. It's Eric Jackson.
Okay, Eric Jackson, yes, Mr. Open Army.
Open Army. He got accused of being leading another meme stock breakout rally in Open Door, and it's really turned out to be the reality is he's got a hot hand, right? And yeah, there's been some pullbacks in these stocks, but I love Eric too. He's humble. He's super active on socials. You can learn from him, and he gives great stock ideas. So if you're looking for new ideas, new generation, Eric's a great source for that. And we were happy to have him on the show a couple times, even after technical difficulties, if you remember.
Yeah. And I think, specifically with Eric and Mike Alfred, that both being so active on social media, as from a retail investor perspective, they're kind of sharing a lot of their it's personal and their personal, thoughts and stories, and they're being humble and honest. But it's, it's sometimes, I think, as you mentioned, people look down, would think they're pumping it, or they're doing, sensationalized, type stuff. So I guess it's a fine line, but for me, I love the fact that they're just honest and they're, direct.
Look, but here's the thing, right? Like, if you've done the homework, who gives a crap if you're shouting from the rooftops? Like, this is a real company. It's a real deal. Like, these guys are not, like, there's other people out there like Citron Research, Andrew Left, who used to just short stocks and then use his appearances on CNBC to push them down, and then he was trading out. Yes, I've read the SEC investigations against him and can say definitively it wasn't rumored that he did that. You could actually see his trading logs, the days he was going on and saying like Tesla's a short or what other companies he was targeting. They were actively trading the opposite of that to profit from it. But that's not what Eric is doing. That's not what Jonathan's doing. That's not what Mike Alfred's doing. Like, they're passionate about something. Don't we want people to be passionate and get behind it?
Absolutely.
Yeah. Alexander Castro, 2356. What do you guys think of the future IREN? And good afternoon. Good to have you, Alex. I love the future for IREN. I think, yes, there's some more risk there. If you're talking about buying new chips every 3 to 4 years, and what's the value of those chips, and can you recycle, reuse for a longer period of time? But I think this whole AI energy space is going to have a great 2026. It got overheated, perhaps, maybe a little bit ahead of itself in the last few weeks and months. You saw this huge run-up going into November. I mean, look at IREN. It was like sub-20s back in July, and then went all the way, to $80 a share. So those were good times. They weren't too long ago. Don's daydreaming. I caught you, dude. You were just dreaming off. And then Eric Jackson too. Like, he talked about IREN. So both of those interviews well worth watching, just for insights. But thank you, Alex, for joining the conversation. That's a reminder to everyone watching us now. You're watching us live, and you can join and change the direction of the show a little bit. Is Exxon a good investment in 2026? I'm partial. I think I don't want to pick any one of the big super majors in terms of oil and gas and energy. I would just play the sector ETF, the XLE. That's the best way, in my mind, to capitalize on the undervalued energy sector. And then obviously I work for Prairie Operating Company, a small oil and gas player in the DJ Basin of Colorado. I think small caps is another way to play the energy boom if you want to take a bit more risk. I think there's actually an ETF that is small cap oriented for energy. I think the ticker is PSCE. So it's another one to look out for.
All right, good questions.
Yeah, I know. So rounding out the list for our best guess, I think this was our top guess. You may disagree.
Yeah. Well, I think so too. Just from a engagement and audience perspective, I absolutely think so. Beth came on, talked about her, forecast for Nvidia, being a $20 trillion market cap, potentially.
Which sounds ridiculous, right? But then she gave an explanation that was so reasonable that they needed to grow, continue to double in size and trade at a 25 times earnings multiple for the next 2 to 3 years. Not that difficult to get, based on history.
Yeah. And,
so,
I think
big, bold call.
I think you when you were talking to her about it, it could, you were even saying yourself that it could go higher than that potentially.
Yeah, which is crazy right now for anyone to think about that. We sound stupid saying like Nvidia to 20 trillion when, the whole AI trade is kind of on its heels right now. But look, here's the thing. Look at Nvidia's results. This is a company, the largest company in the world, that reported quarterly earnings and sales growth of more than 60%. I think sales were up 62%, earnings were up 67%. For a $4 trillion market cap company, like, they're not supposed to grow that fast. If you look at Apple, that was the knock against Apple forever, was that, hey, it's too big, it can't scale. And they weren't growing as rapidly on the top and bottom line. So Nvidia is not, here's the thing. I think Walmart trades at 40 times forward earnings. Nvidia trades at 23 times. And we're in an AI bubble when Walmart trades more expensively? I don't think so.
Sounds kind of silly when you put it that way.
It does sound silly, but here you look at the chart, Nvidia over the last year, 5 years. I mean, this has been on a phenomenal run. The pullbacks, as all stocks do. So again, last episode we said the way to play the AI trade, if you do nothing else, is go long Nvidia, go long Alphabet. So Beth Kinded making a really good case for why Nvidia's got to be a core position in your portfolio. And like, here's the thing, her performance stacks up. I mean, this is what was so impressive to me. Put her performance up against the top hedge fund managers, and she does better. So results matter, as one of my mentors said, and no results I've seen are better than hers. So go give her a follow and subscribe to her services, or just pay attention. She puts out a lot of good content as well.